Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Today we have a familiar face coming back on the show. We have Mr. Francis Hunt, the market sniper, the crypto sniper, and last but not least, the reset sniper. Welcome back on, Francis.
Glad to be back with you.
Yeah, it's an absolute pleasure as always to have you on the show. And it's the new year. It's 2023. It's the first time of you coming on the show in the new year that we've seen ushered in. Let's talk about maybe a little bit of an outlook for certainly the start of the year. Let's talk maybe a little bit about risk and how actually we're noticing a bit of a shift and risk not being the flavor of last year at all, maybe coming back into favor or focus. So maybe we can just get a bit of an overview on what you think's going on right now with markets.
Yeah. So I'm going to, as always, we'll drill down and eventually get to the crypto, but I'm going to encourage people to start on the top of the mountain and look at everything. I was just tootling and kafoofling a little with iShares 20 debt. So this is an ETF of debt. So let me go to the share screen so that everything you hear me say, you can have a look at the chart yourself and come to your own conclusions around. So if I share on there, we're looking at an ETF that is long-term debt. And many of you might also have heard about the extremity of yield curve inversion. And on our YouTube channel, we've covered it quite a lot, and I might still have an image kicking around that I could pull up. But this ETF of debt, remember, the system is a debt-based system. So someone was saying, gold is, and this is something Bitcoin should aspire and we'd love to see in crypto. So if I mention gold, don't see it adversarially, see it as our friend gold that is non-fiat and anti-fiat. I always encourage that mentality, one physical, one digital. And having both could serve you very well. So one of the sayings is, gold is money. All other things that have been borrowed into existence have a liability, contractual liability associated to them. So the whole concept, everything else is currency, basically. So that's why a debt market is actually the dark half, the dark side of the moon of the dollar, the front side that you use for your transaction. They've been borrowed into existence. What's happening in the debt markets? And we reaffirm things we've said before, so I'll go quickly on this, but we called a reversal in that pink circle on the break of that grind line for a first inverted in a new trend. We suggested it would meet that neckline, then have a rally and then break down and run that target down there. On that instance, we were accurate. And this is a loss of value in debt. So this is devaluation. This is not the yield. The yield has gone up. That's the interest rates that you've heard Jay Powell, etc. The yields have gone up. Now you'll see that many people are talking about the recession and peak pivots and peak inflation and all of this. And that's how much of an effect it's had so far on the value revaluation of debt. So don't forget, you were here at the needle-crafty peak moments, and you've traded down there. And with all the peak inflation and all the peak debts, go now buy bonds, wear diamonds, you're sitting here. So I think you'll agree with me if you just look at the overall scale of this long-term debt portfolio, that's not a bounce to be that excited about. And our overall view that you've had a secular, a full-blown 40-year end of cycle for debt occur that started there and then had the triggering of the head and shoulder there with a rally in during that point is quite possibly still going to continue at a later point to the downside. However, you may get a bid and you'll get a little bit more upside rallying possible as people that have been trained through habit for 40 years. And this is not crypto people we're talking about in the markets. When in fear, they're going to rush to US treasuries, which would be a combination of buying the dollar and buying the debt. And as you know, the dollar's been weak so far for an extended period. So you're not seeing the buying on the dollar. In fact, people are forward pricing. They are forward pricing. Markets attempt to be a discounting mechanism of future possible events. So that's why the concept of buy on the rumor, sell on the fact comes into play. There's that forward discount. The old Gretzky, Wayne Gretzky, the hockey stick player. He's not skating to where the puck is. He's skating to where he expects it to be at some point in the future. And the market is attempting to do this all the time. So remember, it's a guessing machine. It's a voting, polling, guessing machine of future events. So you are getting some degree of a bid under the debt market recently on account of the weak dollar and a bit of fear. That's what's going on in there. That's different to what we're seeing in Bitcoin right now, and we'll come and we'll drill down and get to that. It's my assessment that generally, if it's good for gold, it's in the longer term, if Bitcoin is to represent a digitized version of gold, again, you actually want a good gold market as a crypto guy, because it will probably lead to a good Bitcoin market. One being digital, convenient, easy to move fast around the world. The other one being held tightly in your grubby mitts, as sure as you can hold a baseball or a rugby ball or whatever your sport of choice is, like this, and you own it. So you have a little bit of both. Someone's got to come and take it off you in your hands. You're protected against hacks and digitization. In the other one, you have the convenience and the utility. Keep them in the same stable, in their own allocated horse's booth, but in the same stable. It's not an enemy. So that's the debt market. Then we have a look at that dollar, because we're talking about it. And I've done a lot of charts highlighting the damage, the strength of the dollar did to Bitcoin, and the period of weakness, what it did for Bitcoin when you had the crash of the dollar. So again, as a reminder, I'll just take some draws off there and we'll split that chart. So just so that everybody understands, you want pain for the dollar to have good for Bitcoin. So if I get Bitcoin on the bottom side of this, and of course that relationship is pretty much the same with the gold as well. So if we have Bitcoin over a similar period, let's see what we got.
Just to go back for the non-financial people that don't really understand the traditional markets, what Francis was just showing there with the iShares, with the bonds, is the relief rally that you've seen for the bond market is kind of a way to look at the risk markets. It's the risk markets have rallied with the bond market. That's what you're really looking at, and the correlation there, if I'm correct on that.
Generally, bonds are a fear trade. So you've had a weak rally on the fear. Remember that the bonds and the equities are the ones that are being discussed and cared for most by traditional Wall Street. So when people are concerned, they're getting out of equities. So there has been a pretty poor year last year for equities, which is considered the risk-on asset. They cycle into bonds, and often foreign nationals choose American debt over their own country's debts, especially if they're smaller current countries, but even British, after the events of their pension scheme, which we discussed in previous times, would also have had a flow into. So that pushes the dollar up and the bonds up. That's generally a fear trade. Bonds up, dollar up. Risk on is equities, and as we've seen, also Bitcoin and also gold. So that's a very rudimentary model that will have diversions and aspersions. But the point about what the dollar does next being critical for Bitcoin, I want to highlight out of this chart where I've split them, and they pretty much, the dates are designed to be pretty much underneath each other. So I've done that. Let's see if I've got it correct. Let's get 2023 here under 2023 there, and pull that through. So 22 is aligned with 22. What you'll see is there's an adversarial relationship. You kind of got the start from a lows of a dollar move up, and you've got a bearish market on Bitcoin. However, it's not universally exactly true all the time. You had a spell for a week, I call it a non-new high rally of Bitcoin during this period, but that coincided with a small amount of pullback there. So you've got a little bit of support, but you also had you had to fight it a little bit against a reasonably strong dollar as well. Then we had the COVID crisis, which actually brought Bitcoin down. So you can see the bear, generally bear during the strong dollar period all the way to there, generally bearish, small rally here and then slam. So Bitcoin was largely down from 14K to 4K, and you were still in the dollar bull cycle. It got a bit bumpy with the whole COVID things, but at that high point and from that low, you'd had a very aggressive dollar generally, apart from a couple of dips which occurred just there. And during that period, you were kept from the 2017 December 18 high. You were kept in a bear market. You were allowed a small rally that didn't make a new high. It wasn't so small. It was 14,000, but you didn't hold it for very long and you got dipped. And then the COVID really floored you back down. Then America went proliferation crazy, and it was 6 or 7 trillion to people. Many other people do not realize that actually it was another bank bailout on a far larger scale. This is not the meme or the media narrative at all. You had another bank bailout. They just didn't want that hate the banker cycle all over again. The Fed provided over 20 plus trillion to all the core bulge banks again, because of a repo crisis in 2019. So we should have all gone peak hate banker during COVID, but we were so distracted by the needle crafty and the need to save the world from this health agenda that we missed the fact that it was a bank bailout. So you got that. During that period, this was a bear market all the way down for the dollar, and it gave us our first cup gold nugget break that took you into the 64,000 there. More recently, we've had the dollar bull. So we go back to the pink. It kind of started from here, but it really started to accelerate there. So you had a spell where it was kind of flatlining, a little bit up, a little bit down. So that's broadly a flatlining place. I probably should have done it in a different color, but that was a sort of chop. You went sort of double bottom-ish over there. That was your 64, 69, your 64K head and shoulder, my apologies, into, again, the dollar being weak. That's low down here again. That saw it start, the Bitcoin start going up. But then the dollar started going up again too with it. Around about here, you tapped out at the 69 on a marginally higher high. And then you got the inflection up of real dollar strength, and that's just been leaning. A couple of pullbacks there that gave you that flag, a bit of a respite, and then another surge of strength that gave you another surge sell-off. So what the dollar does is quite important. So now when you look at it, the Bitcoin rally, you shouldn't get too giddy about it, because actually the dollar's recent performance from here up at 114, and we called for 111 targets, and it was blown through there. Roughly, it went parabolic at the 110, smashed your 111, and then didn't hang on to it very long. That was your blow off top and down. So that's been a pretty down period. And you only really, if I just draw a straight line down from that, that comes from October over there. You didn't get much goodwill here because you had the FTX crisis drag crypto down into a weakening dollar. So you were actually, Bitcoin was trading down into a weakening dollar that's continued to weaken. And you're only now getting that selling fatigue and boost. So as nice as it's been, this little up period, for particularly for hodlers that have held on, it's not spectacular given what the dollar has done since October. And in fact, crypto-related issues have continued to suppress crypto in an environment of a weak dollar. So you're kind of late, and you've done a small amount in lieu of how much is done. So actually, crypto could do with dollar falling further. So the question now becomes, can it fall further? And this time we get some of the upside with that, and there's no new FUD, Binance, etc., other knock-on effects of FTX, all of those things. So this is where I'll bring you back to this draw here. I want to highlight that there's a very, if there was a next level of low where I would expect the dollar index to get support, it would be down here, round about here, a round trip to just through the hundreds. So we've already taken out that secondary high to the downside. This could be a short-term low point and it could rally up. But if it continues down for a while, I would expect it to start to find heavy weather here and bottom in this region, the 99s to 100. I would expect it because there's been so much price action. We had the inverted, that was the beginning of the downside there. We had this head and shoulder that I've drawn the head with the orange W and the two contact points with the neckline for both the shoulders, that targeting. This is a very intense area, and this is quite open area over here. Not a great deal that's happened. So it's almost, would we talk of voids and vacuums? So if the dollar is to lose more, it's a nice place and it could drop quite a bit more. So if the dollar dropped from 102s to a 99.8 or ran the technical 100, that would get everyone calling death of the dollar, and that's usually the bottom. But in that instance, Bitcoin could see a 26K upside, and you could even start to see one or two alts. However, I would warn that if we go back to the Bitcoin chart generally, this overall macro environment is more likely to be, which is why we haven't gone full mania, is more likely to be, and I'm going to go back to the log scale, similar to this period here, where you had a run and you had a big dip down and you failed to make a new high. Everybody's been spoiled by 2010 to 2017 Bitcoin, where essentially it was, introduction, major hyperbolic move, bear market, major hyperbolic move, bear market, major hyperbolic move, and now you're at 2017. Since then, what you actually had is a bull run that failed to make a new high and a substantial retrace. And I think this is more the model. It's harder to push it up. It requires more favorable macro. In the early days, it didn't matter what the dollar was, didn't matter about anything. It mattered about proliferation, use, the technology. It was all crypto-specific drivers. As it's become more a large category asset, it's now subjected to the travails of the macro world. And as a result, I have to unfortunately report the macro world's in a very unstable place. And there's guys Oxbow advisors that are saying certain public listed equities could go to zero and be bankrupted. The bearishness of last year, which was the worst year in history for bonds and equities. So there was a 60-40 portfolio. So traditional asset management, the traditional world that many people in crypto don't know about, is that you used to have 60% equities, 40% bonds. And between the two, you got a combination of defense and attack, and you usually ended up and you reduce the overall volatility of your portfolio. And as people age and they're getting to pension and retirement, they don't want a highly volatile portfolio, because if they get hit at the low point, they could be flushed out with half what they had for their retirement. They'd rather have the inherent stabilizing aspects of the 60-40 portfolio. The 60-40 portfolio had the worst year, I think, since 1700 and whatever. I don't know how you have records that far, but who knows? So take it with a pinch of salt, but it got wrecked. Bonds got wrecked and equities got wrecked, both simultaneously. And that inherent insurance is the end of the 40-year cycle that we called 2 years ago. So you've had a lot of talk about outside markets, but the macro is weak. So you could get up to, so let's just drill onto Bitcoin and see shorter timeframes, what possible targets are being suggested. But let me just remind you, suddenly interventions of macro, which are very bearish, can come and absolutely piss all over the parade and wash out your party. So please be aware of that. There are also still outstanding downside bearish targets from the blue head and shoulder that is there. That's around 15. From this bigger one, it's not the red one. I'll just make it the orange one over here and draw it in for you. So there are still, that doesn't mean they have to be met either. It's not a call. I'm just suggesting that there is scope for that level also to be met. That comes from that original 64K and the neckline where the falling wedge formed when we had our first knockback over there, when the dollar started stirring. And then you have this big bear flag from here that has a 12,000. So there are some levels below that could suggest that there could be more. But there's also some upside targets. So let's talk about the optimism, because people hate pessimism.
But they have to deal with it.
They have to deal with it. Yeah.
But for the first time in around about a year, we actually took a position in the crypto space at the start of the month. But we made sure to be very, very clear that we're not bullish necessarily, because how can you be given everything going on? And it wasn't a call for people to put 100% back into the market. It was just an area where we thought there's some value here. We don't know exactly where the bottom's going to be. I'd rather have 4 or 5 chances at it than 1. And that's kind of how we play things. But people have to deal with the fact. And what we just spoke about with the dollar, if you're betting against the dollar at this point, you're late to the pullback. So you've got to be very careful.
There could be a bit more. We could go 99s and 98s. I think it's a very congested area for supports there. But I mean, it could, if it lost the 98s, 99s, 100s zone, I mean, it could go a lot further, and then you'll go into a contagion to the downside. That could be awesome for Bitcoin.
Yep.
And very good for gold as well, because I will be showing you the gold chart as well. And I'll be telling you it's your friend, not your enemy again. But let's just bring in the crypto guys with charts they're more familiar with, because I'm aware many of you are not in the traditional realm near as much as I have been, given the time I've been in the markets. But, you know, you had the final spill there. That was a smaller spill than all going before it. So we were making marginally lower lows. So there was an indication that we would potentially lose our downside momentum. So there's a low, there was a low, and then there was a low. And you can see it took longer to fall less far. If I compare it to that last low, you're only a little bit lower, you know, and it took a long time to get there. And that was pretty hectic. FTX, that was King FUD. You know, a lot of people were affected by that. It was a well-proliferated platform. And so those marginally lower lows pointed to it. And then you got the low volatility. And generally, low volatility is bullish. Generally, not exclusively. You can get a squeeze. So we're in the 6,000 where it spilled to 3.2 during the 2018. There was a very specific structure that had us bias bearish, but it was hard for us because we know low volatility can be bullish. So if you use a historical volatility indicator, which is available on TradingView, many of you have TradingView, you would have seen on the bigger time frames. Let me just give you, say, a weekly so you can compare, that we were getting into a very low period compared to what we'd been. You see, that was sort of your 2017, 18 highs. And if you, sometimes it's difficult relatively to see that. So if you sort of, you know, blow off highs, you draw a sort of level there, and absolute lows, you draw a level there. You could see you were getting in and around here. Now that's just dropped, but you've been on the low side. And I like to sometimes put a halfway mark split as well. You can see you've been on the low side for a while. The volatility was reducing strongly here, and it stayed in that bottom half. And then more recently on the shorter time frame, you could also see, I should get the Bitcoin chart actually showing there, shouldn't I? Let's just go daily. You could see how low this was on the daily. So it will adjust by timelines. This is super low vol. And now you made a very nice mini parabola. You paused at this key 21,000, which was a localized high here. And that's what gives you the possible option of that shoulder. This is a head and a very small shoulder. That's a little bit of a bad jaw on the head. Let me redraw that. Went a bit wide there. There. Pull it through like that rather. Sorry. So correct for that. Take that off. So you had a little bit of a big, you know, cupping left shoulder and then a deeper dip for a head. It's kind of a structure. It's not the most textbook perfect one, but that actually has a 26.5 short-term target on it. You rested here where you would expect at the 21 because it ran through this key level. We did have targets for the 21K. It ran through this, most of your volume by price for this area. If you do volume by price analysis, which is what we do, not going to do it here, ran very much through that 21 level. So you have got ahead. You could retrace all the way back to the 21 before building up again to go higher and still be bullish. And then that's a 26.5 that is implied. So that's one thing that is on the shorter time frame, as long as we don't get major news and bedwetting macro, or FUD, Binance loses its stuff, or whatever the case may be. So we're vulnerable to those downside hits still. The other aspect that was also pointing to higher upside was our Bitcoin dominance analysis.
Okay, yeah.
So we had 40% as a very key floor level. That has been for an extended period. So that's from 21. When you drop down here, this was the last alt run. 40, 40, 40. We had a bit of a falling wedge. We expected to break out of it. Eventually you broke out of it. You had another run up to the 48. Then you came back down 40, 40, 40. So you can see the 40 in the blues regularly interacted with. But what you were getting is less rallies to the upside. They only went as far as the 42%. That's that blue line there. You see the 42, that represented that. So we had gone from, if I draw it, a more lower volatility period had come in on the Bitcoin dominance, where it was hanging quite heavy. So that was your larger box. And then you'd started to fall into that lower box range. However, when you rolled off here, we'd suggested dominance might fall off and that you could possibly see the 40 again. It actually found the 41, which was also a little bit of a neckline down here for this reversal. That W there, you actually bounced, and that was a turning point. That was a higher low, and that then led to a takeout quite aggressively and break. So that of itself is also a bottoming structure in a bigger level, and that implies a 45.5, 45.4. So you've yet to make that. So the option could be that Bitcoin could be at 26 or maybe 24 or 25,000 when you make 45.4. You're currently at 44.5. And we are saying you should be at 45.5 for that target to be made. So that's also slightly short-term, encouraging, but be careful. And then the big areas of resistance come back in at 47.5, where you've been resisted before. And usually by then, the alts start running and taking back some of that dominance too.
Yep.
And that's where FBTC comes in. I see Ethereum being a big part of their plans. And we've spoken about the FBTC. At the moment, Bitcoin is dominating ETH. So you can see this is coming off. So we did ask the question, okay, I'll just let the historical volatility go there. We did ask the question, could this turn into either something that gets broken, or will it turn into an upsized squeeze that goes up? And we've got our answer. The bagel broke. The basing ascending grind line broke. And you got your first warning on a dip spike and back up. So that's always, if it gets broken, it's bearish. And then later you've seen ETH come down. Now, I want to highlight this because Ethereum, as I say, I think they have plans for it.
Oh, for sure. There was a report that came out from one of the banks in Australia that was saying they're actually piloting their own Australian dollar, and the crypto they're going to use is Ethereum and ALGORAND. So they've definitely got plans for Ethereum. It's been a chosen one.
Did you say?
Yeah, ALGO. Yeah.
Yes, I know they're working with central banks. I've actually met a dev that was talking about it and saying that they're working with central banks. So this could just turn out a bit of a complex top for a while, and you could get a deeper dip somewhere here, but at some point you do that. And we do feel that, you've got a 12% run in you on Ethereum.
Okay.
12% of Bitcoin. And it's in and around the 6-7%. And the Ethereum market cap is 45% of the Bitcoin market cap. So if you get an ETH going from a 7-ish to a 12, it's adding about 50% in scale. You start to have Ethereum heading towards 65, maybe even 70 if it's upper side percent of Bitcoin. So you'll get the flippening stories coming out again, potentially on that. So if we just show you on the bigger time frame, ETH, That is specific to Huobi exchange. It's not my primary exchange at all, but it's one of the clean charts I use. So overall, FBTC has quite a lot of reversal structures against Bitcoin. So let's start with the smaller ones first, there and there, there and there and there, with that being your head. We called for that and we got that. Beautiful execution. And that gave you a new neckline as well. Now you've got this structure like this. I think it could come either down first, so Bitcoin still dominates for a bit more, but that the longer term, when the alts take over again, if there is to be a full bull run, or even one like the 14,000 echo bull run, let's call it, failure to make a new high, you could get some dominance out of Ethereum coming back. So that's ETH against BTC. And actually, if you do just FDOM, which will then include all the other tokens in it as well, you get a similar chart, but slightly different. And you can see reversals.
Wow.
Everywhere. I've got a lot of annotations on here, so it's a bit confusing.
And the pattern that you're highlighting is everywhere in charts, these sort of head and shoulders on both the up and the downside.
Yeah.
You can see it all over the place. It's probably one of the most prominent patterns that there is. So, and actually Bitcoin could be in it's got its first little head and shoulders. If it does get to that 26K, do you have a neckline there? Maybe is that something? Maybe you're forming another head and shoulders.
Well, this is what happens is you get what we call nestled head and shoulders. We teach this in the program and you'll be experiencing this for yourself firsthand. This is the first head and shoulder, actually. The one in gray that I'm doing for you in blue, and that was the first neckline. And we were calling when we had that squeeze that Ethereum would get up here and then break. And then we said, that's it, it's broke, and it's going to go up. And then we had some guys in the YouTube comments saying, you're wrong, and it crept back down again for a revisit. And then it actually did on a smaller time frame, another fractal of a head and shoulder, and then went and made the target of the ETH dominance. So we ended up being accurate, but it gave you a bumpy ride. It returned to the neckline, reversed again, and went. So there was a little bit of schizophrenic, and you've got to be, your stop has to be there. You know, you should have stayed in it and should have won. But a lot of people, when you're on big time frames, they don't stay the course. So that was a big move for Ethereum, and I think it did 4.5 in the end. And then it started grinding up, which showed a loss of momentum. And then it had spill. But that's actually serving you in terms of the next reversal structure, which is this big red one that I've now drawn, a macro one that we've drawn long time ago when this happened. And that is your right shoulder, a macro right shoulder there. You have the super spiky left shoulder, and this entire structure that was the nestled inverted head is just one big macro head. And your neckline becomes this key level over here that we've done in blue for you, and you'll see it's 20%. And that's such a critical level for ETH dominance. Now, if Ethereum dominance were to get a run from the 7, from the 20, you could have both 34 and a 56 potential dominance.
Do you know what's really interesting about that? There's been rumors. The last time me and you spoke, I brought up one of the big legal people that deals with sort of regulations. And they essentially said that there's been rumors that the SEC are going to start sending out non-security and security letters to individual cryptos. So
they're doing it already.
If Ethereum gets to 34% or 56%, which seems unimaginable maybe at the moment, given how many other altcoins they are doing all these exciting things, maybe there's a bit of a regulatory favorite coming for Ethereum, and maybe that's what's going to propel it in terms of that sort of that kind of make that sense to me fundamentally, why something like that may be coming down the road and it gets to these targets, which seem insane. 34% dominance or 56% dominance.
I know Hex has had letters, and people who promoted Hex on YouTube channels in America have had SEC letters from Gensler. So they will kill all possible rivals. That's my kind of concern for Pulse and Pulse Chain and PulseX, is that the chosen one competition is sin. These people don't believe in competition. And this whole thing of, oh, we're trying to fix the gas prices. It's extraction, mate. It's an extraction mechanism. They want extraction mechanisms. You know, you've just paid a scandalous amount moving cross-border money via, and as I have, you know, I've paid about $80 in various charges to move money globally. You think they're really going to go and give you cheap options to move your money around and stop extracting you? How will they do it? It'll just take another form, gas fees, some other thing. You're always going to be extracted on for doing things you shouldn't have to be extracted on. And they are going to avoid allowing the freer, lower cost ones to compete because they want extraction monopolies.
Yep.
You know, and it started with oil. Oil is a global tax, and Ethereum gas will be a global tax for the people that own it, hold it, and control it. And, you know, so that's how I see. So it's actually a business model, and business models are required to make money. And it's just the same as the Fed wringing their hands about, oh, the Gini curve and the poor people and the extension of the wealth. It's terrible. And continuing to do inflationary policies that exactly make billionaires richer, devalue their debt, upvalue their assets, and punish the working poor. They actively talk one game and promote by their deed another. And you need to understand that, this duality system, that it's not here to make things cheap and easy for you. It's for them to have a new system of surveillance finance and control over you that gives them ever more power, and extraction is maintained in a new form. That is the truth of the matter.
Absolutely.
So, you know, unfortunately, too many people are dewy-eyed and idealistic about Bitcoin who don't understand their history. Monopolies don't allow other monopolies or other future Fedling things to destroy their monopoly. They buy them and they take them over, they control them, and they embed their extraction in the new system in the same way as it was in the old system. And that's a hard fact of corporatist fascism and statism. Anyway, enough on the lecturing. So this actually sees, you know, a 34% dominance on Ethereum when it's trading around here. So the game will be outside of macro bedwet moments where there could be a similar to COVID demand destroying event. You could be badly hit. So leverage, watch the leverage. But the game should be Bitcoin dominance to start, the honey badger scenario, and then a pivot according to FBTC into others. And I think this one will be a big winner. That doesn't mean there won't be one or two tokens for a while that won't outperform it. It's a much bigger market cap, but it's a safe investment hodl after the Bitcoin has met its 45.5 dominance target that we showed you in the BTC chart, or the 26.5K target. I would then pivot and roll into Ethereum for second stage of bull. But I would watch leverage because you could get panned. So now let's leave crypto and just go to gold and silver, your family member that you don't want to love, but is actually uncontrolled by state and can still be bought.
We're really on the same team. I think that's a really important point that you raised there. We're both anti-fiat. Yet there's this, I think because of people like Peter Schiff and people like that, I think there's this real battle between one another, which I don't think needs to be.
And I think they've fermented that by intent.
Oh, for sure.
To create headline and all of that. And as I say, I wouldn't, you know, have a stable of horses, not one. It's been a favorite phase of mine. To all the guys that said, I've gone irresponsibly long in a single thing, or all in, or crypto is 99% of my wealth. Well, right now you would have wished that you'd actually at 69,000 or even 50,000 put half of it in gold, because actually gold's gone up and held its own. And crypto's lost on average 76% if it's Ethereum, 95% for most alts. And I think probably not far off 70 for Bitcoin. So this guy's done pretty well. It did break a key technical level, but overall, the structure here is probably suggesting a macro time frame bull flag. probably suggesting. So when you make marginally lower lows, there, and there, and you have, that was a secondary high. That was almost as high, but most of the high was here. And we're probably slowing down a bit now. We could probably have a little bit of a rest. I don't think we're just going to go straight up and make new highs. It's possible, but you could probably have a half move down on some, a bit of dollar strength. If the dollar strength doesn't come and the dollar goes to 100 or 98, 99, 100 range on the Dixie, I think you could pop out the top there on gold. But the key chart I want to show people on gold is the gold-silver ratio. Because by the time the gold comes to the party, and this is very much like the Ethereum, you were talking about head and shoulders being preeminent patterns. And we have a unique way of dealing with complex head and shoulder structures that most people are missing head and shoulders they're not even seeing. This is the gold-silver ratio. This is almost like an inverted chart. Down is good. Down is good because it means gold up and silver more so. It's a bit like Bitcoin dominance down. It means generally, and has meant typically, Bitcoin up and alts even more so. It's your bull market favorite. So if I just turn the lights off for a second and highlight just the red, we have a shoulder, a macro super spike head, and then another shoulder. That is your gold-silver ratio, which is in the realm of the financialization of everything, which has made everything about digital and leverage and devalued commodities, physical and holding. In that realm, we feel there's a commodity value. The inputs have got too costly, and this is the whole narrative of inflation that's now seen these rating increases. So there's a big head and shoulder in there, number one. So that's one thing. And inside of the right shoulder, we feel there's another head and shoulder. So if I turn that on, just so that you could see the target, 32.8 is our call on the macro, the red head and shoulder line, gold, silver ounces. That's actually not special. Most of the 70s and 80s, you're at between 15 and 30 on that value. So we have been hyperextended as part of this 40-year bond cycle of debt proliferation, where money was borrowed into existence on a great scale and everything pumpermental stock market, this whole fake wealth game that has created asset valuation highs for the smart people to get out at the top and leave the bag holders in. You now have a reversion back to things that are useful, valuable, storable, and cannot be easily confiscated unless they send a man with a gun, and a bigger gun than yours. Then, you could have quite a substantial breakdown. Now, if I go into this right shoulder, I will show you in the blue head and shoulder. So I'm going to get out of the weekly. And just on a point on this, if I conservatively said gold made 3,000 on that target, that would be stupid of me. If you're not guessing 5 or more, that would be stupid. But let's say it made 3,000 only.
I've seen banks call for 3, and they're usually,
very unders.
Yeah,
and
yeah,
it's basically not far off 2 at the moment. So you're talking about a 30% move. What that would mean is that silver, which is in and around $24, $24, would have to be at 3,000, 1/3 of a 1/3 of. So if it was 100, silver would have. If it was 100 gold silver ratio, and gold was 3,000, silver would be $30. If it's going to be 33, it's going to be 3 times more valuable than $30, which is $90. So at $3,090 silver, you have a 32.8 measure. So it's quite substantial if gold goes up. So that $90, imagine what that's going to do for silver miners. And silver, don't forget, the lithium, the silver, all the copper, the cobalt, all these things needed. They're going full ESG world. In actual fact, I saw one tweet that was saying you need 13 times more rare earth minerals to do this ESG that they are promoting. So the windmills and all the other aspects. That means 13 times more holes in the ground and spoiling the planet. So the great
in the name
irony
of not spoiling the planet. Crazy.
This farce is unbelievable. But let's just park up that and go into the right shoulder and look at the blue draws.
That's fascinating. Have you got any videos that I can maybe link in the description where you talk silver mine? Because the only silver miners I know off the top of my head are Wheaton and First Majestic.
Yes, there's also, for example, for the UK guys, which is where you're based, and I'm sure you've got a good following. It was Fresnillo, but most of the mines, it's UK listed, but it is Chile, Mexico holdings typically. And there's plenty more, so we can have a talk about that. But we had actually predicted, we were around here, and we said, we think we're going to get a right shoulder. And I've had to move this line 4 or 5 times. So I forward scenario cost. So that why do I do that? It's not trying to be right. We put lots of scenarios. So I've created the word scenario cost because a forecast is something your ego and you are emotionally invested in seeing come true, because that means you get to be right and the other guy gets to be wrong. Trading is not about right or wrong. It's about making money and happily be wrong regularly and make a whole bunch of money, rather than be one of those traders that's always telling you how right he is, has never made any real money because he didn't have any money on it and he never really believed it. And only after it's happened, he's now telling you how right he was. So we do lots of scenarios to tell us if we're on the right course. We think this is one possibility that you might do. If you do that, I'm riding the right horse correctly. If it does something different, I'm getting early feedback before I've lost any money that actually that scenario is not worth thinking about, or I must park it up. It might come later, but it's not happening now. So it goes back onto the longer term shelf as an idea, or it's discarded entirely. What subsequently happened is this went up, and we feared, and I was buying gold and silver then, and I thought, well, I'm concerned about security of supply. So I think I could actually be buying at a top by securing gold at these prices. And that's exactly not happened. I expected the price to go against me, but it's because it's a long-term investment. So recent purchases, I was expecting it to go against me, because for the gold-silver ratio to go up, normally I would associate with both going down, silver more so. What's ended up happening is silver's kind of treaded water in the 23 to 24.5 range, and gold has continued to climb. So we've actually, the purchases already that are made in the back end of last year and early part of this year have already gone into money. I don't treat gold that as significant right now, but it's actually quite nice not to make a buy and have it go negative, especially when that was my expectation. So the investment buying, timing wise. But my big interest is this blue shoulder. So let's use the blue color and highlight. So in the right shoulder of that red macro that I showed you, there is in fact a left, and we could include that part as part of the left, a head, which I've drawn all cubic there for you, and then the making of a right shoulder on the gold-silver ratio, which is exactly what you want because you want a reversal and a fall down. And we've gone with a conservative neckline through the price range there because we had an upside funnel and we have a reason for it. You can learn, like all in crypto, is done by joining our community and learn about complex head and shoulders with HVF patterns embedded with them. But whether you use that as a neckline or something here, we've already detected that we have 2 neckline interactions. This down leg, if you trigger coming back down, that or that, those are both possible necklines, which I think will happen because it's getting a bit wicky here. You see a bit of a shooting star, but it pushed higher again, bit of a shooting star. We had a rising wedge. We expected it down. No, it's pushed a little more, a little more. There's been some panic buying of gold. Also, by the way, as a separate point, we've seen a reduction in holding of US treasuries by China, Japan, and then you get the UK, Euro, Benelux, the Ponzi maintaining old Europe of Belgium, Benelux, UK, and other curious holders. But there's been and at the same time, there's been a buying of gold. So gold has been pushed higher because central banks can't store the amount of silver they need for the money they have. It's almost too low value. So in the event this rolls over and starts to come down, you can expect me to start looking at trades, not investment, trades that might involve minor amounts, small conservative amounts of leverage for going long silver. And that's when you're silver miners. Now, overall, this is all in crypto channel. This should be supportive potentially for Bitcoin if crypto maintains its role as an anti-fiat and there's confidence in crypto being a viable alternative to dollar. So this could be a loss of dollar. So the dollar index could, during this phase, could bounce around the 98, 99, 100 and then fall down and really lose its way. This could be a couple of big news events that haven't really got a lot of news. Saudi Arabia will take yuan and other currencies and into consideration for purchasing of oil. Now, remember, our good friends Saddam Hussein got attacked and flipped when he suggested he would take euros and threatened the petrodollar. That was 20 years ago now, I think. And then there was a bit of exported democracy for Libya and a torturous pulling from limb to limb, absolutely barbaric, of Gaddafi, who actually was one of the most benign and malevolent dictators of Muslim regime, where the women were more free than they are in Saudi. You know, young couples got given a home by the state. The oil wealth was shared. The notion that he was this evil guy, some people will mention the Lockerbie bombing and all of that. I am sure there's a lot behind that. I don't fully believe with the official narrative, but let's just say a Libyan was behind it. It might have been behind, he might have had a role in it. I don't know. But nonetheless, he got taken out. Now, America doesn't have the stomach. So the two big events that combine was the Saudi petrodollar announcement and the pulling out of Afghanistan by America, where they cut and ran and left their shit and left people running after the airplane. I mean, there was, don't forget that. So that is, we're done with this Middle East adventure. It was the graveyard of many empires, Afghanistan, from French, British, Russian. They all seem to want to learn it. And that's how they break the back. Go into a dusty desert that gets freezing cold in winter and stinking hot in summer, and, you know, a religious fanatic group of people, and go try to tell them how to live and have huge distances, deal with the logistics of that. Let me tell you, that's a bottomless pit budget for a military industrial complex.
Was Gaddafi going for a gold currency, was it? Was it a gold-backed currency?
Gold-backed dinar. So dinar was his currency, and he was trying to get Africa together. And I've been doing a lot of things on BRICS nations and Africa.
Very interesting.
And quite a few things. Africa is huge. It's the most divided into countries place, but it is absolutely freaking huge. And many people don't realize, they think, you know, they think of how big Russia is, and it is indeed big, but the crossing the bulge of Africa is a longer distance than Moscow to Vladivostok. That's about 6,200 miles. Africa crossing the bulge is 7,300 miles. But because of how the globe, the world is shown on maps, Africa is always in the middle. And as you go to the edges and the corners, it brings distortion. So Africa is a huge, huge continent. So anyway, we got the BRICS, and I've been doing a lot of work on total population, commodities. So guys interested in this can follow the Market Sniper currency. So we've looked at who holds the gold, the silver, the tungsten, you know, the buy commodities, America versus the BRICS. I did an America versus the BRICS video. Go and watch that if you're interested. If we just were looking at things on basis of physical things, technology is not going to disappear. It's a thought exercise. But who holds the gold, the silver, and everything? America versus rest of the world. And I included Japan as an industrialized nation. And then I did market caps of stock markets, because I'm interested in where the flow of the money is going to go as the demographic cycle turns for America. Peak boomer, Q4 2022 retirement. So the biggest generation ever is now divesting and investing less, divesting out of bonds and equities to fund their retirement, selling big expensive homes for smaller convenient homes, etc., etc. Where's the wealth going to go? Because the generation behind it doesn't have the scale, and they gave us the biggest debt Ponzi scheme. So America, if you look at its liabilities, is more indebted than Japan. It's probably around 650 to 900% in terms of their Medicaid and all the things they've committed to. So the reset has to happen, and it has to happen soon. And the crisis has to happen that they will manufacture. The next crisis will be a manufactured crisis, because they have to renege on promises they made a long time ago that they have absolutely no means or ways of committing. And there will be a brand new deal. I'm even guessing that they will use the phrase new deal. You know, I started calling myself the reset sniper, and then the World Economic Forum said we need a great reset. So I was branded before them, and they came and parked their tanks on my lawn. And I'm going to give you the branding for the next one. A brand new deal. You're going to see a new deal for Citizen America. And that's going to be your UBI and CBDCs and surveillance finance. And it's going to come as a solution to a subsequent crisis, which could be financial, it could be economic, it could be warfare, it could be all social unrest, supply chain, everything. So with that all in mind, you've got to understand it's not going to be a low volatility environment for crypto. That's the key thing. You know, you're listening to a guy talking a lot, not about crypto. And it's the learnings that you do outside of your industry that make smart. All the best medical advances often made by engineers. Outside of all the best technical advances are made by people that are not in the clone wall thinking. So listen to the people outside that talk about outside things. If you are investment only, you can sit through. If you are leveraged to the hilt and some of this stuff comes going down, you are going to get absolutely wrecked. This is not the time of leverage. I've only really once said, leverage, even smartly leveraged hands who know how to utilize it will make money. And that was in the first cup gold nugget break, which was the collapse of the US dollar and the run up from the 8-9K level to the 64,000 level. It's probably the only time that I thought you don't even have to be too smart. You shouldn't cock it up. You just have to sit on your hands once you got it on and not be over leveraged. Literally that you could have had a 1 Bitcoin in a BitMEX account. You could have gone long a 3x leverage, had 3 Bitcoin, left it on and got off on our first cup gold nugget target at about $55,000, $56,000. And you would have
happy
got
days.
up 6 times on 3 times your size. So you would have had 18 Bitcoin out of 1. If that's not a good result, I don't know what is. And you would not have been ridiculously over leveraged. And this is not, so I repeat, what I've just described is not the current environment that we're now going into because of what's going on. So, and that was with, 2, 3, times leverage. So don't do it. You had 1 Bitcoin, you got another 2. It's 3 times. You're adding 2 more.
I do genuinely believe that most people should not even, unless you're a trader and you do this for a living, most investors should not touch leverage. It's how they take the money from you. I take this from somebody who's blown up 5, 6, 7 grand accounts before with leverage over a short period of time.
Yeah.
Don't even bother.
But people get addicted and it's thrills. There's a certain kind of person that loves being on the other side of selling products of addiction, porn, gambling, and also leverage trading. And other things, nicotine, drugs, various other things. So watch out for the purveyors of addiction. I've always said you are going to be the aggregated sum of the disciplines you impose on yourself, and you are going to be the aggregated sum of all the micro habits that you are compounding, and you must choose your addictions well. You will have them. Right now, wherever you are, you have some form of an addiction. Choose them well. It can be food, it can be sugar, it can be even mine. Coffee is an addiction. I'm sorry. If you wake up every morning with coffee, it's an addiction. It's poisoning, and then you piss out water that is your body's bid to eliminate a poison. You might not like me for saying it, but choose your addictions well, because there's going to be something. Have a cold water, a submersion addiction, and a running addiction, or a weightlifting or an exercise addiction. Otherwise, the void gets filled. If you have dormant time, you'll be in web surfing and social media posting. There's also an addiction in that. Anyway, so this whole reversal could be an incredibly good time for precious metals if it does come out. It hasn't finished. If this kept going up and took out this top, I'm wrong. I just don't think that's going to happen. So I think more and more we're getting validation. We're seeing already some exhaustive spikes here. It could come down, and both of them, we could have silver holding its own and gold coming off a bit. So it doesn't necessarily mean super bullish, but generally if it's going to make big moves to come down here, it's likely silver is running. And silver finds it hard to run if gold is dying. So gold will either be standing still or moving forward positively. So that's going to be a very positive thing. And we've spoken of FBTC. So this conversation has just turned out this way. I didn't plan it, but it's very, very convenient because the silver gold ratio and FBTC are very similar. The Ethereum will do well if it's benign environment for Bitcoin, or Bitcoin is doing reasonably well itself. If Bitcoin is absolutely being clobbered to nothing, certainly for now, while Bitcoin remains the god market, that could obviously change once you make a 34% target and Ethereum is the primary crypto. If that happens, that's going to upset a few maxis possibly. I don't know. As I say, I think they're both controlled. They wouldn't be allowed to exist if they weren't. But you know, that's a moot point. Don't listen to me. You don't have to subscribe to my opinions on that. All I'm saying is, in the same way, silver, we're seeing a silver gold. So we could actually be predicting a dollar death scenario. So this makes me want to bring up the Dixie index again and have another look and say, okay, what happens if we let go of that 98-100 handle? How bad could it get for the dollar? Because I've mentioned a few things now. There's going to be viable alternatives in the real world, not crypto world, the real world of finance. And if people start unwinding that treasury debt, that head and shoulder reversal, why are you holding dollars and treasury debt now if they no longer hold the monopoly on the currency that must be used for transacting for oil, for commodities and everything else? If everyone's going to start dealing in the 5 R's, rupees, rimbis, reals, and rands, and riyads, which is the Saudi, why do we need to have so many dollars on our treasury book? Hey, we need a few more rands. We need a few more rupees. We can buy gold in rands. We can buy oil in, euros, all of them. So suddenly we're going to get an opening up of choice of currency, and that could be very, very dangerous for the dollar. In that particular scenario, which I think has a reasonable possibility, you could get murdered by picking bottoms here. So if we ran this zone, how bad could it go? I used this end of day Dixie on the very, very big time frame.
Just to add to your point there, this is what people need to realize with the current system. It's only valuable until it's not. It's only valuable for as long as people believe it is. As soon as people start dumping dollars and losing faith in it, it's game over. And this is why there's been such a concerted effort. You mentioned Gaddafi. There's also many, many, many other examples of where the US has beaten its chest to basically bring people under this dollar house, essentially. So in our lifetime, and I think we're both very much in agreement on this, we're going to see a new monetary system. I mean, you may have seen some changes to the monetary system. I have, all I've ever known is pounds and dollars and whatever. In my lifetime, I'm very confident, and it's likely going to have some sort of aspect with the cryptocurrency market and blockchain as a technology, that we're going to see a different monetary system. And whether that's gold, whether that's crypto, whether that's who knows, it's coming at this point.
Yeah, I spoke of the 9 major industries on one of my reset videos. Those guys can buy a handful of LBC tokens and watch on Odyssey, because there I speak freely without banning risk. And Rijkaard's book on store closed, supply chain shutdown, highlighted the 5 I's, which is all the Anglo-Saxon nations: New Zealand, Australia, America, Britain, pan-European spyware, dark state, your real government in essence, and highlighted them and said, we need to rely less on China on these particular 9 future very core industries. And he lists 9 industries, and I'm going to see if I can deliver them rote from memory. A1, that AI, which is artificial intelligence, is first. It's not a surprise. You've all heard of it before. You're seeing ChatGPT, etc. Robotics. That's your replacement for labor on menial tasks and quite smart ones to come. Then you're looking at computer hardware. So that's the power of CPUs, chips, and various other things. That's not new. That's fallen under the old tech banner, but it's going to continue to be core. Then you have number 4 on the list was cryptography, crypto, in essence. Then you have materials and manufacturing sciences. So this is things that the place where they brought out graphene, which think of the needlecrafty substance that's in there, and that helps transmit signals, etc., that actually is highly transmittable and is made very, very small, which will bring in one of the other industries. But first, let's keep the order, otherwise I won't remember them all. Networking and computing, quantum technology, and then nanotechnology, which is the one I think very much with the graphene and the needlecrafty that occurred, and that great solution. And then finally, synthetic biology. So this is someone who's consulted with the CIA, naming the 9 industries that I've now named. So them again: AI, robotics, computer hardware, cryptography, number 4, material sciences, which is the creation of new materials and the manufacturing thereof. And then you're looking at quantum technology, nanotechnology, and you're finishing on synthetic biology. And these things pulled together, these look like separate, disparate dots. These are industries to be invested in, which I think are going to be pushed through Israel. We're going to see less of the tech going through the States. I think it's going to go a lot more through the Middle East. So I'm seeing more capital formation going through the Middle East. You'll probably have more, modern cities, Neom and the Edge, etc., going through the Middle East. Saudi, Qatar, all of them. They're the cousins of the Israeli. I think the sanitized face, listings-wise, for China will be Singapore. So that is going to have, I see that market doing very, very well as well. So the Middle East and Singapore as investing equity markets will be super, super strong. And I see a dissolution away from the dollar and American industry. So there'll be new tech heroes that won't be American companies, that will be big and list on local stock markets, giving those stock markets the new place. So there'll be new Silicon Valleys. It's not the only place where technological people exist. And you'll also see Mumbai and all of these things. But you mentioned what you mentioned, and I'm here to tell you that crypto is part of that. It's number 4 on that list that I regurged to you. Along with AI, nanotechnology, super small. And that should have you thinking of Bill Gates' multiple sixes patent, where you perform push-ups and you got paid crypto into a wallet embedded in a chip in your body. So everything in that screams transhumanism, military-industrial complex, a war and a freedom loss. It's us against them, and it isn't nation states, it is dark states against citizen. And it's globalized, dark states across the world cooperating in the control over their citizens and surveillance finance. So that's pretty negative. But if the dollar continues its fall and falls down and eventually meets this 100 and surrenders that blue line that I've got there, and I'm not saying it will, it could bounce there. But if it were to, and it starts approaching this lower line here, this super flat gray one that I've drawn at some point. So if I just drew a trajectory, let's say it had a reaction, bounced, and then spilled through and was now here, you would seriously be at the fulcrum of that silver head and shoulder, precious metals getting a run, silver getting a run, commodities getting a run, dollar losing ground immensely. Now the DXY is measured against the euro, and the euro is a problem. And so is the yen, and everything bar the Swiss franc is pretty garbage, the pound as well. So, but you could still have the dollar losing some ground against all of those generally, because its need for use would see a sustained period of divestment in dollar holdings. Every central bank and every treasury of global multinationals and non-American hold disproportionate amount of dollars because they have to. They have to buy inputs, and it's all priced in dollars. So that demand and that level of usage of dollar would then start to fall away. That broadly will mean a better opportunity for other currencies to be considered. And that's Bitcoin and crypto's window and Ethereum and everything else. And it's also an appreciation of physical things, because everyone is focused on fiat systems failure. It's better if you hold it. And that will see everyone go back to baseline principles, hold it, before we get sold a new scam of how it will be different this time, and we all buy into the crypto world and its utility and its convenience, and then we go back in. And that's going to have cryptography, nanotech, synthetic biology, which sounds like a metal arm for me, as far as I'm concerned, and a chip in the brain and various other things. So watch out what's coming. But that, yeah, so that has us go back to the Dixie, and let me give you a chance to respond to that.
Yeah, for sure. No, it's very, very interesting. There was another book that Charles Hoskinson actually mentioned recently, and it was talking about AI, crypto, and social networks, and how they all come under one roof. And this is the future that we're moving towards. We've heard the World Economic Forum talk about the big problem of the next sort of century, and that is, what do you do with all these useless human beings, you know, when robotics and everything takes over? So we've covered a lot, and this is one thing you helped me do last year, which helped me avoid a lot of pain. Even though the channel's called All in Crypto, we were largely all dollars last year. And the reason being was quite simply because we saw trouble coming down the road, looking at other markets and relating it to the crypto space. It's so interesting, everything that you've spoke about and where we're sort of moving towards. And one of the big questions you've got to be asking yourself is, what's happening with the dollar? You know, and we've looked at a number of scenarios. We've looked at crypto, we've looked at gold and silver, which has correlation. I have actually looked at Bitcoin against gold, and that's, you've looked at this falling wedge yourself, I think.
Yes, I haven't shown you that, and I'd like to do that.
Yeah.
Before I finish on this, I wanted to just show you one spreadsheet super quick, just as a little bit left of field for the crypto people in terms of capital formation. Remember, if you go where the puck is going to be instead of chasing it, this is something I've highlighted also on my Market Sniper channel. 40 trillion of stock market valuation held up by 336 million people. Means each person is holding up $119,000 worth of market cap. Contrast that with China, 11 trillion, each person is holding up 7,000 market cap. Contrast that with India, who have some great minds in the tech space, 1,914,000. So less than 2,000 compared to America's 120,000 of market cap. Equity market cap. There's a real premium to US equities. Russia is $3,000. They have 447 billion market cap. Brazil is 2,400, 2,380. South Africa has an 800 billion market, quite chunky, for its 65 million people. That is a 12,750. So there's a bit of an axis with the United Kingdom and Commonwealth with South Africa. So it's slightly higher priced. Another established market who's going to be terrible on demographics, they're more adult nappies than baby nappies, 5 trillion, 4.9, $40,000 basically per Japanese citizen.
Wow.
But do you want to be an investor in the Nikkei or the American indices, or do you want to consider the BRICS and or Saudi, Israel, Singapore, which is not included in this list? The BRICS total, by the way, is 15.4 trillion, still less than half America, and for population, 4,700.
Wow.
So now that doesn't mean every population is equal, and every population is productive. We have 65 million in Africa, and many of them are tribal Africans that haven't even had full schooling. You can't compare that necessarily to an American that's done college and everything. But in terms of sustainability, which is commanding the premiums. Now, admittedly, also they have global market share. So this is one single matrix, but it's still an interesting point. 120 versus India at sub 2. I would imagine the Bombay and those indices could do very well when they start keeping some of their tech talent at home and start getting organized and entrepreneurship, and there is capital formation around that. I think that could be a very strong index. They're very undervalued. Many people will highlight lots of corruption, it's corrupt everywhere. America is sophisticated corruption versus the obvious varieties of corruption. And it's the same for all these nations. So that's just a quick thought for where the flow of money goes. And it's one I find really fascinating. And we haven't included Saudi. The other optimism for Bitcoin is versus the NASDAQ, which is something we've famously done, and we seem to have popularized because I'm now seeing other people doing it.
Well, we actually gave you a shout out on one of our recent daily market updates, because we looked at Bitcoin against the NASDAQ, Bitcoin against gold, Bitcoin against the SPY, and Bitcoin against the US dollar. And you've got the same DNA of what could be a falling wedge in all of them, potentially showing maybe some I don't know what your take on that is, overperformance or strength against these asset classes. But I'll let you.
There is some hope here. So, because recent times in crypto that I've been on, I've just been largely net bear for all of 2022. By the way.
Rightfully.
And bull dollar. Now, I'm much more circumspect at the moment. I think there's a chance. If you look at it versus the NASDAQ, it has actually surpassed that previous high and is already in high territory and is at the break of a falling wedge. There's our first cup gold nugget against the NASDAQ. It still has that target to potentially make. And that is our falling wedge draw, and it is breaking. At the moment, it's on the border of it, basically. As you mentioned, Bitcoin, gold, BTC. Let's just get it up. I will take. There is BTC on Bitstamp. Also, if you just take it against the dollar, it's also in the same structure against the dollar. So it's not like this doesn't exist on the dollar. It's also on the same structure on the dollar. Look at that target make, by the way. That's HVF method for you if you like that idea. It's an exceptional sell on the top end of the left sell, and then you stay out. All of this was churn and highly volatile. And look at the falling wedge forming on our interim level. Look at that breakthrough, revisit to our interim level. It's all in here. Look at that. Where you might have a pause, pump through and dump, and then you go make. That's your exit. It's a brilliant line of efficiency. Minimum amount of time, maximum gain. That's your triangle. That's what you want. Time in trade, gain.
Something I'm very, very much looking forward to learning. You know, I've come on board and now I'm joining the snipers team, and it's something I'm really looking forward to, actually, to be fair.
Yeah, we're glad to have you, and you'll enjoy it. And there's a great crowd of capable people in there, and you can see these broadening structures and the sell-offs. But that's against the dollar alone. We can do this against gold quickly and get him up. Let me just clean my face a bit there and divide by.
Because this structure's, it's kind of across the board almost. For many things. I haven't done it against oil or anything like that. Is it GC? Exclamation mark, is it?
Yeah, GC1
exclamation mark.
Yeah, exclamation, which will give you the first of the current. And you can see we've drawn it there. And against gold, it's broken as well. And it had a steeper capping descending grind line. You'll learn about grind lines, but this gradient you'll probably noticed against the dollar. This has been more harsh on Bitcoin, but it broke it sooner because it's a steeper gradient. So that break has already happened. I was highlighting this low volatility as a potential event. And we talk about 3 impulses as well. 1, big pregnant; 2nd impulse, very common; and 3rd. And then you move for your break. So it's very, very interesting that. So for the guys that have just heard me be bearish for most of 2022 until recently, there's some encouragement here that crypto, has it's ceasing to go down at the same rate as other things. It was going down harder. Then it stopped going down. The rate, it's skidding into lows. Big hits and skid sideways, another hit, skid sideways, and then a smaller dip, and then lots of sideways, low vol, and now the first move up where you're matching the other house. So it can indeed be a bottom, but it's going to face unbelievable, unheralded economic case study based events. And leverage, if you get a massive smackdown, will hurt you. And that's the key thing. So investment only is one of the key things. Cautious bias long. And I'm actually in Bitcoin at an investment level. And it's the first time in a very long time.
Fantastic.
And I'm preparing to roll in Ethereum, and it's investment only. And I will not, and if we go into a second COVID, I won't eat that fall.
Yep.
So I will get out and rather take the loss. So do take bits of profit, listen to targets, have reasons to take off. If you don't have reasons to take off, you'll keep dancing to the upside until the market gives you one to take off. And it usually does it when you can't afford to hold anymore. Do not a forced seller be, because that's always at the lows.
Yep, absolutely. Francis, this has been another amazing interview with yourself. So much alpha revealed on this video. It's always an absolute pleasure to talk to you. Very honored to have you on the show again. We'll leave a link to where people can find you, to the Market Sniper website, to all your social medias in the description. Francis, it's been an absolute pleasure. Thank you very much.
Absolute pleasure. See you next time.
Thank you.